It was businessman Michael Althasuler who said, "The bad news is time flies. The good news is you're the pilot." In this lesson, we're going to compute the fees involved in buying and selling stocks, and we're going to define the basic vocabulary of stock trading. All to answer the question, how do you buy and sell stock? Before we get into it, let's make sure we're ready for this lesson by looking at warm-up number 2. Twice the number x increased by 10 equals 52, and 115 less than 3 times the same number also equals 52. Write two equations in terms of x for this situation. Well, twice the number x would be 2x. Increased by 10 would be plus 10, and we get equals 52. Now, 115 less 3 times, so minus 3 times the same number, which is x, and this is also equal to 52. Now, use these equations to determine the number. So if I just add all of this together, I'm going to get a negative x plus 125 is equal to 104. This means that negative x is equal to negative 21, or x is equal to 21. Now, let's take a look at a problem that you will be able to do by the end of this lesson. Darryl is purchasing 700 shares of Buddy Industries through the Creative Brokerage House. Their fee schedule is shown in a table. The shares will cost him $32 each. How much will he pay in brokerage fees? Darryl first has to find the total value of his purchase to see which line of the table he's going to use. He multiplies the number of shares by the purchase price. So 700 times 32 is going to give us 22,400. He looked in the first column of the table and found the interval containing 22,400 and sees that the fee is 0.3% of the value of the shares plus a flat fee of $75. He converts the 0.3% to a decimal and then multiplies it to find the commission he's going to be charged. So we multiply 22,400 times 0.003 and we get $67.20. We have to add to that the fee of $75 to get $142.20. So the brokerage fee for the trade is $142.20. Now let's define some vocabulary in stock trading. You don't buy stock at a store. Shares of stock can only be purchased through a licensed stockbroker. If you decide to sell your shares, you couldn't bring them to school and sell them to someone in the cafeteria. You also cannot walk into a stock exchange and sell your shares. Only stockbrokers can buy and sell stocks. They also give advice to investors. For their services, stockbrokers charge a broker fee. The broker fee can be a flat fee, which does not depend on the value of the transaction, or a commission, which does depend on the value of the transaction. The commission is a percentage of the value of the stock trade. Some people make their own investment decisions. They read their financial newspapers and websites to learn about new developments in the stock market. They still must buy and sell through brokers, but they may decide to use a discount broker. A discount broker and an online brokerage house charge low fees. They do not give investment advice. They only make stock transactions. Discount brokers are available online, by phone, and in person. An online trading account is convenient because the investor can access it 24 hours a day. A full-service broker gives investment advice and charges higher flat fees, commissions, or a combination of both. Some customers of full-service brokers have unlimited free trade accounts, but the brokers charge around 1 to 2% of the customer's total assets per year for the service. If you buy or sell at the market, you are instructing your broker to get the best available price. You can also place a limit order, which specifies the price at which you want to buy or sell. If you put in a limit order to buy or sell a stock below a specific price, your broker will not make a purchase for any price higher than the price specified. The fees you pay brokers when buying or selling stocks affect the amount you gain or lose on the trade. Your net proceeds represent the amount of money you make after broker fees are subtracted. Make sure you are aware of the broker fees whenever you make a stock trade. To compute the actual gain or loss of a given stock trade, you need to include the broker fee into the calculation. Now, let's compute fees involved in buying and selling stocks. Devin made 2 trades to his online discount broker, WeTrade. WeTrade charges a fee of $12 per trade. Deion's first purchase was made for $3,456, and his second purchase later that day was for $2,000. How much did he spend on the day's purchase, including the brokerage fee? So Deion made 2 trades, and he has to pay 2 brokerage fees, which means 2 times 12, which is $24 for those trades. Deion paid $24 in brokerage fee. Next, we're going to find the sum of those 2 trades. One of those trades was for $3,456, and the other one was for $2,000. When we add all of these together, we get $5,456. So the purchase price of the stock was $5,456. This is the fee plus the total price. So the purchase price of the stock was $5,456, but there was the $24 of fees that got assessed. Deion spent $5,480 on trades to use his online discount broker. Let's check our understanding. Garrett made 2 trades in one day with an online brokerage house that charges $7 per trade. Garrett's first purchase was for $17.90 and his second purchase was for $84.56. How much did he spend, including brokerage fees? Well, we know that there's the $17.90 purchase and there's the $84.56 purchase, but there were 2 trades at $7 per piece, so we have to add $14 into that. Adding all of this up, we're going to get $10,260. Adriana purchased $7,000 worth of stock in a single trade from a broker at Tenser Brokerage. The current value of Adriana's portfolio is $11,567. What brokerage fee must she pay? Well, Adriana's fee are in the first row because her portfolio is under $250,000. She is using a broker, so her fee is in the last column. First, she has to multiply the percentage expressed as an equivalent decimal by the amount of stock and then add $15. So 0.005 times $7,000 for her trade plus the $15 fee. This is going to be $50. So the total brokerage fee is $50. Let's check our understanding of this. Jared has a portfolio worth $500,000. He made 10 automated telephone trades during the past year, buying and selling $50,000 worth of stock through Tenser Brokerage. What was his total brokerage fee for the year? Express his total brokerage fee algebraically if Jared had made B automated telephone trades. Well, if we look back, we can see that his portfolio is greater than $250,000. So it's going to be $12 a share and 4%. This means that we're going to take 0.004 and multiply it by the 50,000. We're also going to add in the $12 fee, and this is going to give us $212. Now, the second question asks if he made B automated telephone trades. So it's important to realize that it's $12 per trade, but there's an additional fee of $9.50 when these are done automated. So 12 plus 9.5 is going to give us $21.50 per trade for B automated trades. Through Viking Brokerage, Erin purchased $23,510 worth of stock and paid her brokerage a 1% broker fee. She sold when a stock price increased to $27,300 and used a discount broker who charged $21 per trade. Compute her proceeds. So we need to find the purchase cost, which is going to be the purchase cost C is going to be equal to the cost of the stock S plus the brokerage fee B. This means we're going to be looking at $23,510 plus 0.01 her fee times 23,510. And this is going to give us $23,745.10. Now, when Erin sold the stock, the brokerage fee was deducted from the sale price. We need to find her proceeds. Now, she sold the stock for $27,300, but she had to pay a fee of $21, which gave $27,729. The net proceeds equals the difference between the purchase cost and the amount received from the broker. So we can say $27,279 minus the $23,745.10 to get $3,533.90 as Erin's net proceeds. Let's check our understanding of this. Yolanda purchased stock for $7,000 and paid a 1.5% broker fee. She sold it for $6,325 and paid a 0.5% broker fee. Compute her net proceeds. Well, we know that she made a purchase for $7,000. We have to add to that she's going to pay a 0.015 of the $7,000. This is going to give us $7,105. Now, she sold the stock for $63.25, but she has to subtract for that the 0.5% brokerage fee. So $63.25 times 0.005. And that means that she's going to receive back from the broker $62.93 and 38 cents. When we subtract this, we're going to find $811.62. Johan purchased the stock 6 years ago with a full-service brokerage for X dollars and paid 2% broker fee. He sold the stock yesterday for Y dollars and paid a discount broker $35 for the sale. Express his net proceeds algebraically. The purchase cost is the sum of the cost and the brokerage fee. So we know that it's going to be X dollars plus X dollars times 0.02. When the stock was sold, the brokerage fee was $35, and the sale of the proceeds equaled the amount different from that sale. So the sale of the proceeds would be equal to Y minus 35. Now, net proceeds is equal to the difference between the purchase cost and the amount spent. So we can say Y minus 35 minus X plus 0.02X. Now we can combine any like terms that we have, and we're going to wind up with Y minus 35 minus 1.02x. Let's check our understanding of this. Rob purchased stock for P dollars and paid a flat fee, $40. Rob needed money for home improvement, so he sold at a loss for $8 plus a 1% brokerage fee. Express his net proceeds algebraically. Well, we know that he purchased it for P dollars and a flat 40. So P plus 40 was the purchase price. We also know that he had a loss of $8 plus the 1%, which means we have H plus 0.01 times H. By combining these like terms, we get 1.01H. Now, we know he sold it for $8 and he had a 1% fee. That means we are subtracting it from the total value. So we get 0.99H. This means his total is 0.99H minus P minus 40, because we have to subtract the total value of what the purchase price was. Darryl is purchasing 700 shares of Buddy Industries through the Creative Brokerage House. Their fee schedule is shown in a table. The shares will cost him $32 each. How much will he pay in brokerage fees? Darryl first has to find the total value of his purchase to see which line of the table he's going to use. He multiplies the number of shares by the purchase price. So 700 times 0.32 is going to give us $22,400. He looked in the first column of the table and found the interval containing $22,400 and sees that the fee is 0.3% of the value of the shares plus a flat fee of $75. He converts the 0.3% to a decimal and then multiplies it to find the commission he's going to be charged. So we multiply 22,400 times 0.003 and we get $67.20. We have to add to that the fee of $75 to get $142.20. So the brokerage fee for the trade is $142.20. Let's check our understanding. Using that table from example 5, express the brokerage fee for X shares of stock at a price of Y per share, where X times Y is greater than $100,001 algebraically. So we are looking at this line down at the bottom, where there is a 0.1% and a flat fee of $200. So we can say 0.001 times the XY, and then we're going to add in that flat fee of $200.